All right, so let's move into the Euro Aussie. All right, so we know into the latest cycle that the euro has been bullish. Right now, it's correcting based on some of the fundamental data, economic data coming out. But I still think because of the inflation situation where everybody's kind of having the same issue with wage pressure, right? Wages is sticky, and they are in Europe. So despite some of the economic data, they may still be looking at 25 basis points in September. So we'll see. But right now, we're trying to work our way from weekly level, overall bullish, trying to get to that 382. But you can see the market moves in waves. So now we have a new weekly high. Right? Over and over, everybody get your reps in. Okay. We're pushing low. Okay. So now it's just a matter of how deep we want to correct. Well, we'll continue to work our way down to the charts. And you can see that, yes, it was moving bullish and we're in an up retracement zone. So you can see that we got a new AB boundary and we've got a correction right off the B boundary. Now we're coming into 166.71 support. Okay. So let's see, right, if we get held up here and we get a bounce. Don't know yet. But if we move down to the 4, the setup that we've had going so far, coming out that 118, 127 zone is looking pretty good. Okay. So that's been a nice move. Okay. On the correction. Doesn't look like much. That's 355 pips, everybody. 355 pips. Now, if we break through that daily support level that we're talking about at 166, if we break through that, then we may just be headed on down to our 382 target. It's 200 pips away. Okay. So if we come down and we take a look at the 1 hour, the Euro Aussie trade idea that we put out for those who were looking for that initial setup or people looking to add to the position, right? That was a winning trade at 126 pips and it's still pushing lower, right? So that was the previous ABCD wave. Okay. A, B, right? We had our C, okay? And then we had our D come in at the target. Boom. Okay. So the risk on that was 63 pips, hit 126 pip target. Okay, so that one was pretty. That was pretty good. It worked out. That was a pretty clean move. And right now we're in the midst of a new AB boundary. So let me pull this out. Clean this out. All right, so that's the old play. Bang. Take this out here. Like that. We just set our charts up with Smart Trader and we just let the fibs run. Okay. So we can take that target out. And now you can see where we are. We've pushed up to a 382. Would have loved for that to move a little bit higher. But here we are at this 166 level. So if we break through it, we look for a continued move down off the 382. In the beginning, when you're learning, as frequently as possible, right? As frequently as possible, so you can get the reps in and you start to develop that spatial intelligence curve as often as possible. I know Ryan, when he dove into this, he was doing it. Ryan, how often were you marking up your chart? I know it was constantly that you were doing it.
I was redoing them every day.
Yeah.
I was
Yeah.
redoing them every day.
I remember that. I remember that. You know. Uh so I know I go through mines I look at mines every week, because I'm looking to see if there's any new, support and resistance levels that have formed, you know. And then yeah, all 28 pairs. And then I'm cleaning up my charts just like I just did on that one, right? The old play has finished out and now we're looking at the new stuff. Right. So because this is the move here now. We're moving down. So this is not my level. I like it a little bit higher. So that's not good for me right now. But we're moving bearish on this. Yeah. And here's that 4-hour 80-20 level. Okay. So you can just see how the market just does this thing. And you see how it start whipping around within that AB boundary on that last wave. That's okay. Because we're trading the zone. We're trading the zone. And as long as it didn't take out our A, that's the beauty in what we do, everybody. As long as it didn't take out the A, it had no choice but to go our way. Okay. So all it is doesn't matter. It's like, what's my entry? What's my target? It can get there however it wants to get there. Okay. Sometimes it takes a while to get your head wrapped around that, right? And developing that patience. But you can see, right? It's 126 Bitcoin. Okay. Yep. Right. So you trade. So you trade in ways, Caroline, but like here's the way. Okay. So here it is. Okay. You see, right? So you can see where the entry was that I had. Okay, 61.8 and higher. Okay, I didn't pick up a second position. Usually, right? And so here's the D. We pushed up to an 8.6, so we project a 1.18 extension. Okay. Like so. Okay. So what I'm gonna do is I'm gonna we'll redraw this. All right, so we see it. We got an AB boundary. Boom. Swing high, swing low. We're moving bearish. Okay. Sweet spots that I like to trade. Okay. Boom. Okay. Now, price moves up, takes me in. Put my stop above the A. Right. Body tell me, right? It's been with us. Why do we like the 61.8s or higher?
High price.
But
Right.
risk
That's
reward.
and the risk reward. You guys are on it. Absolutely. High price and risk reward. This is why, right? So yes, Carolyn, you're on it. This is a wave. Okay. This is a wave. Ultimately. Okay. But the form in which that wave takes and how it, you know, how it shapes itself, I don't really care about. What I mean by that is once I'm in this position, okay, once I'm in this position, it could do whatever it wants to do. Then it's AP boundary. It can move lower, it can move up, whatever it wants to do, kind of like that last Euro Aussie move, right? I just needed to move to my target, ultimately. Right? That's why we always say, hey, I can't tell you when or how long it's going to take. I just needed to move there. Price can move higher. Oops. Price can move higher. Right? Like this last one moves to an 8.6 level. That's okay. Why? Because my stop's above the A. I'm still within my AB boundary. Now I just adjust my TP level. If I had a limit in at that 786 level, it would have took me in. So now, okay, off the 61.8 trade, yes, I have drawdown. Do I care? No. Why don't I care, Benny? Because I already have a stop in place and I know that that stop represents a 0.25%, 0.5%, 1%. I was comfortable with that before I even took the trade. So I don't care if it dances around or if it goes in a drawdown. ultimately I need this to play out. So that's 170 pips off the 61.8, even after a drawdown. And if it catches my 786 trade, guess what? I just clocked 200 pips on that 786 trade. I already know what my loss is going to be before I take the trade. If I've got these orders split at 0.5%, then I know based on my calculation. Why? Because we divide our risk percentage by our stop loss. See what I'm saying? So if this is, okay. So say I can risk $100 on this trade total. So if I do my risk at 1%, it says it's $100 that I can risk. Okay. And you say, you know what? I'm gonna split that position. Okay. At 0.5% and 0.5%. Okay. So that's $50. Okay. $50. So if I take my 61.8 position, my stops above the game, call it 83 pips. Somebody tell me, risking $50 at that position, and it's 83 pips, what lot size am I trading at? That's why we do it, Carolyn. It takes a while because it took us a while. Right? About 60 cents, right? 0.05, 0.06, right? Somewhere around there, right? It's about 60 cents. Okay. About 60 cents, right? It's the max, or 50, right? If you want to bring it down. Okay. So we say here we're trading at 0.06. Meaning, if I lose this trade, right? It's easy, right? 60 cents times 83, about $49.80. Call it 50. Right? So at this level, because price pushed up higher, okay, my stop loss on this about 48 pips. So if I'm risking $50, divide about 48. So we could just say we'll trade that at 1 minute. Everybody follow me on that? Yes, no?
Yes.